This is the trade most people get wrong, because sometimes the most expensive mistake is trading when you don't have to. Let's talk about CoreWeave and why we chose not to trade it. Because sometimes the smartest move is doing nothing. First, we look at the chart. CoreWeave ran up earlier in the year and then dropped real hard. And now it's bouncing. But the bounce is running into the same area where the stock broke down before, around 90 to 95. That level used to hold the price up, but now it tends to hold the price back. So right away, we know this bounce is running into resistance. Next, we map the risk. We always ask one simple question. What happens if this doesn't work? Above 90, the bounce is still trying. Below 90, the bounce starts to weaken. Below 80, the risk increases fast. Below 80, there's little support. It's mostly dead air until the 60s. That's not a guess. That's just what that chart is showing. Then we check the dark pool activity. We want to see, are those big investors stepping in and buying? We didn't see that here. The activity looks scattered, not confident. That tells us big money isn't supporting, isn't supporting this bounce. Then we look at the ratings. Ratings help sometimes, but they usually follow the price. And in this case, they came after the move, not before it. So it didn't add any confidence. Then we looked at the earnings patterns. Next, we looked at how CoreWeave usually behaves around earnings. There isn't a consistent pattern holding gains. Moves tend to be fast and then they fade. So earnings add uncertainty, not safety. They don't improve the setup. Then we looked at the options. Volatility is high. That tells us the market is nervous. If we traded this at all, it would be on the call side, betting that the bounce doesn't go much higher. We looked at that trade, and here's a decision that was made, even though the idea made sense on paper. The payoff just wasn't big enough. We'd still have to watch it, we'd have to manage it, and have to deal with headline risk. For that amount, we'd make it wasn't just worth it. Bottom line, no institutional support, earnings added risk, the reward wasn't there, so we chose not to trade it. Sometimes the trade is passing. That's discipline. Now, if any of this free information has been valuable to you, please subscribe and don't forget to watch our live show at 3:30 on Monday through Friday and 6:30 on Sundays, where we give out our 6 trades for the week. Remember our slogan, math makes money. Oh, and don't forget, Rob is sexy. He slipped that in there.
That's what she said. I can't believe